Good afternoon, everyone. It's Monday, the 2nd of October. Can't really believe it's already October, but I'm Tilan Wickramasinghe. I'm the head of research for Singapore, and welcome to our show on Market Mondays. The S&Ps had a very, very rough month, and the potential US government shutdown that was supposed to happen this weekend didn't really help. Now, that's been resolved, but that's not really getting rid of a lot of other gray clouds that are hanging on the horizon for the markets. So times like this, you need to be really bottom up. You really need to have conviction on the stocks that you buy and build long-term value. So there are opportunities. So we're going to talk about some of those in today's show. We've got one stock which had a fantastic third quarter results, and we are going to have Jia Lin, who will come and talk about that stock and why she thinks this is still a buy and has a very big upside. We're also going to talk about a couple of stocks which have been relatively down and out on their luck recently, but we think that things are about to change for them going forward. And we also have a Philippine aviation stock, which we think is about to take flight. So stay till the end of this show as we go through these. But as usual, let's start with the market movers. Overall, very, very, very tepid week for the S&P last week. We had the S&P down about 0.3%, part of that going into the US government shutdown, but also I think largely driven by the higher for longer sort of narrative that the Fed has been talking about. They've been a lot more hawkish in September. We had the HSI up about 2.5%, so relatively positive there. But we are going now into the Golden Week in China, so don't expect a lot of activity with markets closed there. Southeast Asia was fairly mixed. KLCI was down about 1.1%, but it has had a relatively better sort of September before that. The STI up about 0.3%. And we did see some positive spill coming from there, particularly on the REIT sector. Now, I'm going to do something a little bit different from normal. I'm going to start with the market technicals. And the reason I'm doing that is if you look at what Nick is saying this week, he's actually calling for a little bit of a rebound in the REITs, S-REITs index. Now, he's been generally quite bearish on this until now. So he thinks that after recent decline, there is going to be a little bit of a mild divergence with the RSI, and that should drive a bit of short-term upside. We have also seen from our investor side and from our flows as well, investors have been picking up a little bit of REITs through September. But the next chart is what I'm really interested in, and that's the Straits Times Index. Here, he's saying that the overall index will be range bound in the near term. There is going to be a little bit of consolidation on the RSI here. So it's going to likely tread water. And I think generally markets going into October, you're going to see a little bit of uncertainty and directionlessness as well. So this is why at the beginning of this show, I said you need to be a lot more focused on bottom-up stock selection, bottom-up research during times like this. And we have two stocks in Singapore that we want to talk about. But before I do that, I want to go to the sunny Philippines, and we have Rachel, who's on the line. Hi, Rachel. Can you hear us?
Hi. Good afternoon.
Hi.
Yes, I can hear you.
Great. Welcome to the show, Rachel. So, Rachel, you've written a big report that just came out on Cebu Pacific with a buy rating and big upside, but 60% sort of upside from what I saw. What's driving your thinking?
Hi. Yes, we did initiate Cebu Pacific with a buy and a target price of 55 pesos. This is actually based on our expected turnaround in profits to close this year at 6.1 billion pesos in net income, coming from 14 billion net losses in 2022. So this will be driven by the 34 and 35% year-on-year increase in the number of flights and passenger volume as travel demand rises. So we forecast SEB to exceed pre-pandemic levels and offset its retained earnings deficit by the year end of 2025, which should allow it to declare dividends again to its shareholders. So previously that was averaging at around 50% payout. So as of end last year, SEB operates a route serving 70 domestic routes and 22 international routes. It operates a fleet of 76 aircraft. Its low fare, great value proposition expanded the Philippine tourism market as it made air travel affordable for middle income Filipinos. So this enabled SEB to achieve domestic market leadership starting 2006. And in 2022, it's still market leader with a 51% market share, roughly double its closest competitor, Philippine Airlines, at 26% share, and then Philippine Air Asia at 16% share.
Okay, Rachel. So, you're talking about a big turnaround in earnings. You're talking about, capacity exceeding pre-COVID levels in a couple of years. So looking quite good. But in the next sort of few weeks and few months, what are some of the key positive catalysts that we should be looking out for in the stock?
Okay. Well, yes, in addition to increase in flights and as well as increase in passengers and as well as seat load factor, SEB's refleeting strategy also coincides with the country's initiatives to expand airport passenger capacities, which will further boost this long-term growth potential. So just this July, the Marcos administration approved concession plan for the rehabilitation of the NAIA airport, which is the largest airport in the country. This is crafted in assistance with the Asian Development Bank and pegged to cost around 170 billion pesos, covering a 15-year concession period. So the consortium of the Philippine conglomerates are encouraged to participate in this bidding, and once this is underway, we expect SEB to be adding more capacity, which reinforces their medium-term growth prospects. Also, in terms of tourism, we've been seeing strong growth. The Philippines welcomed around 2.7 million international arrivals for the first half of this year, tracking ahead of last year's 2.7 million and the 4.8 million target for the year. And we expect this to continue towards the end of the year.
Great, thanks, Rachel. But what can go wrong?
Well, the main theme right now is really oil prices rising. So although SEB passes this on to end consumers via fuel surcharges, elevated jet fuel prices are net negative for SEB because it reduces the affordability for air travel for SEB's predominantly low to middle income target market, resulting in lower seat load factor and cost inefficiencies, which flows directly to its bottom line. So we expect jet fuel prices still to drop year on year, but still remain elevated above 100 USD per barrel at 109 for this year, and increase to 112 per barrel next year. And should this increases beyond what we are expecting, it will flow to SEB's bottom line. SEB has only partially hedged to minimize the fuel costs. So for the third quarter, they only hedge about 15% of the costs. Other risks include supply issues as well as peso volatility.
Yeah, thanks, Rachel. They say that it's always more fun in the Philippines,
Yeah.
and we've seen Singapore Airlines, we've seen AirAsia having very, very strong rebounds after COVID. So I think as we go into and I think as we start to see overall market participation and more people take to the air, this is definitely one stock that investors should be keeping an eye on and getting into right now. Thanks, Rachel. Thanks for joining the show today.
Thank you too for inviting me. Thank you.
Okay, now let's go back closer to home, and we've got Jia Lin on the line. And Jia Lin, she's reiterating her buy call on LHN, and part of that is their third quarter results were out. Third quarter results are actually pretty strong. So, Jia Lin, what are the highlights of the results? Let's start there.
Okay, thanks, Dylan. So a few key highlights that we want to share on LHN are operationally, co-living segment remains strong. For audience who are not familiar with this name, LHN is the largest co-living operator in Singapore by market share. It has a total of 2,064 keys under its co-living brands. So the rental rates across its co-living portfolio in third quarter 23 range between 2.2K to 3.5K per month. Meanwhile, the three newly launched projects see their occupancy ramping up to above 85% to 100% level. And in terms of inorganic growth, LHN has completed the sale of its logistics subsidiary and received the net proceeds. Meanwhile, it has executed 3 acquisitions in third quarter with a total consideration up to 38 million Sing dollars. We like its commitment and timely execution to capital recycling. Additionally, LHN has reported new contracts signed under its other subsidiaries. Its facility management arm entered into 35 new contracts to provide integrated facility management solutions. It also added 6 new car parks since May, achieving a total of 760 parking lots. Its energy business is adding 4 more projects to its current 21 solar energy projects. So all in all, it's a pretty good quarter for LHN.
Okay, that's excellent. Now, one of the key concerns a lot of investors have had with this stock has always been their gearing, their net debt levels. So, Jialin, any sort of color that you can share there on how they're thinking about debt now, and how you're thinking about debt and how you're forecasting it going forward.
Yep. So I think so gearing as of first half 23 was 59.8%. So if we look back on LHN's gearing, it basically mirrors how Kaoli Wu grew over the years. Nonetheless, its current gearing level is something that investors should pay attention to, as we mentioned in our initiation report. But good news is we are glad that management is actively bringing down the leverage. So in the latest disclosure, the proceeds from the sale of the stake in its listed logistic arm will be partly used to repay debt. Also to meet its goal of adding 800 kits each year to its Kaoli Wu brand, LHN will enter into entering into management contracts with JV partners for upcoming assets, which will put less pressure on its gearing going forward.
Right. Okay. So some relief in terms of gearing coming through. So any positive catalysts that we should be looking for in the next few months?
Yep. So the good news for investors, so definitely near-term catalyst will be the transfer of listing from Catalyst to Main Board, which LHN has applied and is currently pending approval from SGX. Also, any potential special dividends will be a plus for shareholders. We are also looking closely at future value unlocking divestments. So currently, potential divestments opportunities will in the pipelines will be could be Golden Mile Car Park with an estimated value of 40 million Sing dollars and 55 Tuas South redevelopment project, which will be sold upon completion.
Okay, great. So lots to look forward to. Thanks, Jialin. Thanks for joining the show.
Thanks, Dylan. Thanks for having me.
So, this other sector is a sector that I have been getting a lot of positive and negative reactions from investors every time I talk about that. And that's the Southeast Asian internet sector, right? And this is a sector that has been down and out in its luck since the Fed started increasing interest rates, nearly a year and a half ago. But for me, I always like to look at underdogs and see if there is opportunity and potential and value that can be had. And I want to discuss Grab and Sea today. And for that, I've got Kelvin on the line. Hi, Kelvin. Welcome to the show. Kelvin?
Hi, Dylan. Yep. Hi, Dylan.
Hi.
I couldn't turn on my...
Good to see you.
Yep. I couldn't turn on my video. I'm sorry. Yep.
No worries. Okay, so let's start talking about the internet sector, right? I mean, we're starting to see some strengthening news flow coming
Yep.
through for Southeast Asian internet.
Yep.
They've had a very rough time, as everyone knows, especially compared to some of the US mega caps.
Yep.
So, are we at a turning point, or is there still more bad news to come?
I think overall remain a neutral stance on the ASEAN internet sector as of now. However, we see several bright spots. So firstly, we believe that the competition has become more rational, especially for the food delivery segment, with peers cutting back on promotion to boost profitability. And delivery companies has been focusing on sustainable growth as it expands its market leadership. Secondly, I think we view the competitive landscape in the Southeast Asia e-commerce industry as healthy, with commission hikes across platform closely matched by each other, while marketing spend and voucher offering has also declined. So overall, profitability could boost this impact on the GMV growth in the near term. We believe that the e-commerce players are willing to sacrifice near-term growth to focus on achieving their profitability milestone. These players will try to re-accelerate growth in a more sustainable manner after achieving self-sufficiency. So yeah.
So there's a lot more rationality in the market. Profitability metrics are improving, and it's not growth at any cost, but more rational and more sustainable growth.
Yep.
It reminds me a lot of the banking sector, pre-global financial crisis and post-global financial crisis. We had the same level of excess, and after the global financial crisis, with regulations and things coming in place, we did see a lot more rational competition. And if you really look at the COVID crisis as well as the current sort of crisis, the banking sectors globally have generally sailed through them a lot better than in the past. Now, Kelvin, I just want to drill down to Indonesia and Sea Ltd. We saw Indonesia talking about potentially banning TikTok from doing online e-commerce. How does this play into Sea? Is this good for them?
I think it's a natural boost for Sea's e-commerce platform Shopee, because Indonesia is one of Shopee's largest market, and the platform has an estimated 40% of the market share in the country. I think any regulatory action that bans or limits TikTok Shop would naturally result in market share shift in favor of the existing platform, which includes Shopee. TikTok's potential split of e-commerce and the social media operation in Indonesia could impede further conversion of the 125 million local monthly active user into Shopee, which sells similar products as the TikTok Shop, which relies on beauty and personal care for most of its domestic sales. I think further, TikTok Shop relatively lower structured fee and aggressive investment in Indonesia has spurred Sea to invest more heavily in subsidies and marketing to protect market share. So that being said, I think implementation of the regulation or transition could take time, given the large size of TikTok shop seller and affiliated creator base. Yeah.
Okay. And then very quickly, I just want to move to Grab. I'm aware of the time. So there is some market chatter that Grab might be one of the potential buyers for Food Panda's Southeast Asian business. Now, if this was to happen, is this, will this be a positive move for Grab, or could you be worried about their margins and growth?
Of course, we think buying a competitor definitely makes sense for Grab, given its strong net cash position, currently at 5.6 billion in cash and liquid investment. So if we assume a merger, Grab will be the region's #1 delivery app. It could rise its GMV to 19 billion in 2023, and its market share could increase to 70 to 80% from its current 40 to 50%. So we think that this could potentially increase its economies of scales and profit margin, while reducing marketing expense on customer acquisition for its delivery segment. Therefore, improving Grab's profitability, and likely the share price would increase as well from a value perspective. However, we foresee Grab might face regulatory hurdles from Competition and Consumer Commission of Singapore, which is similarly, have the penalty that was imposed on Grab and Uber post sale of Uber's, Southeast Asia business to Grab in September 2020. Moreover, should the sale go to new entrants seeking to expand in or enter Southeast Asia, this could be a concern to the existing healthy competition in the region, as the scale and other order density are the key driving profitability in the low margin food delivery business.
Okay, got it. Thanks, Kelvin. Thanks for
No
joining.
problem. Thank you.
So we're almost out of time. So I just want to do a quick highlight of some of the upcoming corporate announcements. So tomorrow, on the 3rd of October, we have the URA property index numbers coming out, as well as the manufacturing PMI for Singapore coming out as well. And we're starting the results season. We are starting to get to the results season. So 16th of October, we have Keppel DC REIT. And on the 17th of October, we have Keppel REIT. You'll be able to download a much more comprehensive announcement list on our Monday newsletter by scanning the QR code at the beginning of this webinar, or on your app as well. Now, also, we have a few big events coming up. On the 10th of October, we have Hartalega Holdings in Malaysia. It's an invitation only virtual event, so please do speak to your salesperson on that. And then also we have a very special event on investing in Thai and Singapore SDRs. Remember, SGX released started this a few months back, and now we also have some Thai SDRs as well. Singapore companies listed in Thailand as SDRs as well. You can scan this QR code to join that. And also we have a group meeting on SunPower on the 17th of October as well. So do sign up and speak to your salespeople if you want to sign up for these events. And now with that, I want to say thank you very much for joining us today. Please, keep joining us every week, and please do tell your clients, your friends to join this webinar if it is helpful, and have a profitable trading week. Thank you.